Hello again, and welcome to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, you can find us at zinniawealth.com. We're glad you found us here today. And these are those times that people are tuning in, Sharice, because there's a lot of ups and downs and volatility and crazy stuff happening economically and in the market. So we're here to talk through some of that today. How are you doing today?
I'm doing great. A lot is happening in my world and the universe we live in, and I'm sure everybody's world right now. Lots of excitement, a lot of crying, and a lot of I don't know what in the world to do right now. But other than that, we try to keep at a baseline here at Zinnia and at Sharice's home. And if you get too far high up, you got to come back to baseline. You get too low, you come back to baseline really quickly. Therefore, let's talk about the baseline of the stock market, Randy.
Yeah, I think you and I have talked over the last, couple of months that, the stock market does correct probably once a year. And we had 300 days, I think, since we had our last correction. So we were due. I guess the question is this what's going on right now? Is this self-inflicted all because of what President Trump has done with tariffs? Or is this something that was due anyway? And this might have been the trigger to pull us back a little bit, which is people will say that's healthy for the market to pull back a little bit. How do you see this right? A combination of the two, do you think?
Yeah, it is certainly a combination of the two. We were just talking about Trump and, there's certain logic in what he's doing, but we both wish he would be a little more strategic, maybe a little softer. He wants, to keep inflation down, but now it's going up, all this. Right. But are we in this moment in time where there's this ripple effect, there's noise, and people don't like change? Change is challenging, right? And so we're going to see times like this. And we have for years, I'm telling you, for 3 or 4 years, Randy's talking about, hey, the economy doesn't look good behind the scenes. Maybe on the top, we're looking great. The last couple of years, we all made a lot of money, but we knew that until things change internally, spending, cutting all these things out there just to get the economy rolling again and keeping inflation down, et cetera, it's, we got to put our heads down. We got to do some work. And so now we're here. And last year, Randy, we said, hey, in the first quarter of 2025, we're probably going to see a correction. If not, it'll swing into the second quarter. And that's where we're at. And over time, you have to have a correction. Over 300 days without a correction is just an anomaly, number one. So we're due. And people are out there shopping and buying all this toilet paper because Mark Cuban says this and that. Like, everybody needs to just relax. Listen, I am not the advisor that's going to say, hang in there, don't panic. This is a buying opportunity, because there's different age groups listening to this show today. And whether you're 40 or 50 or 60 or 70, I'm going to say something different to a little of all of you, because at the end of the day, if you're in retirement or nearing retirement specifically, it doesn't make you feel any better when I say, hang in there, buying opportunity, right? What makes people feel better is just knowing that they're in the right allocation, that when the market goes down 10, they didn't lose 10. Maybe they only lost 3 or 4, right? Maybe 5 max. That means you're feeling better about it. You're not taking full losses in the market. Some people we work with didn't take any losses. So if this kind of noise right now is bothering you, it is a sign that you probably need to make some changes to your allocations, because the 60-40 is not the perfect strategy anymore, because there's so many alternatives and everything out there that, hey, when the market goes down, you could be making money when the market goes down, right, Randy?
Yeah, and I think, my original question there is self-inflicted or not? When you start to look at it, what difference does it make? It could be anything. It could be a war that breaks out that makes the market go down. It could be a global event. It could be a local event. It could be anything. And the fact of the matter is, you look at your account right now, and it's down, okay? And you don't like that. Nobody likes losing money. And so we want to, spend our show today talking about what you can do about this and what your emotions are, and not to get carried away with that. And I'm going to go back to something that we've used years ago, because this show's been on the radio for 13 years now. And we've gone through a lot. We've gone through COVID. We've gone through a lot of up. Last year, we went through the Magnificent Seven. Now they're down. That's pulling the market down as well. So years ago, we used to talk about a guy named Patrick Kelly. We've had him on this show a number of times. He's written a lot of books about retirement, and his very first one, Stress-Free Retirement, had this metaphor in it. And Patrick Kelly kind of shows what we're going through right now by talking about horses in a corral.
picture a rancher who has some wild horses out there in his field that wants to get them in his corral. And so he goes down and puts some feed in there that he thinks might attract them. And he opens the gate of his corral and he watches one of the horses walk in and two walk in and 3, 4, 5. And he watches 9 of the horses walk in. And yet he has that 10th one that hasn't come in yet, that's still standing out in the field. So he says, you know what I'm going to do? I'm not going to shut the gate until that 10th horse is in. And so as he's waiting for the 10th one to walk in, the 9th horse that walked in decides to walk back out in the field. I said, now he only has 8. And he goes, doggone it. I wish I would have shut the gate when I had 9 in there, but now I only have 8. There's no way I'm going to shut the door now because I want at least to get back to where I was. The 8th one walks out and the 7th one walks out. And he watches most, if not all of the horses walk back out into the field, and he has none of them that are now part of his ranch.
So there's a lot of people right now, Charisse, that are saying, doggone it, in
Yes.
February, I should have shut the gate because the market was at an all-time high in February, and now we are 10% below that.
Yes.
So let's talk about shutting the gate. Is this the time now when your account is down to say, okay, I'm going to stop those losses right now. I'm going to pull back some of my market exposure, or do we wait for the market to recover and then do that? How is that discussion go right now in the office?
Oh my gosh, there's so many directions I can go here, because if you have a brokerage account and you're trying to reduce exposure from the stock market and you want to do tax loss harvesting to maybe maneuver to new funds, it could be a prime time because there's not a 30% loss, right? Or somewhere around 10. It's bobbing and weaving every day. If you have an IRA and you're wanting to convert IRAs over to a Roth, this is the prime time to do it, because if we truly believe the stock market's going to come back and it just lost 10, well, you move that IRA to the Roth, that Roth is going to grow back that 10% all tax free, right? So there is a lot of momentum right now, and timing is impeccable. And whether or not you take advantage of this timing is really up to you. But you should have already had these conversations with your advisors. I mean, I just had a client come in and I said, hey, markets are down. Let's not wait till the end of the year to roll the IRA to the Roth. Let's do it now. And they're like, oh yeah, great idea. We talked about this. So we tell people, don't sell right now. It's too early. If you've lost 10% because the market went down 10% and you're nearing retirement, you're certainly too risky. That means if the market does collapse, not saying it's going to, right? But if it does go down 30, 40, or 50% and you're planning on retiring in a year, 2, 3, or 4, well, guess what? It takes a couple of years to decline, typically, maybe 12 months to 24 months, and then it takes 4 to 5 years to crawl out of that hole. You might not be retiring if you need those dollars to live on. So right now is prime time real estate to sit down with somebody that understands you, what you're going through, what the next steps are, and whether or not you potentially can retire. So I'm adamant about this because there's so many things we can do right now. So I don't like markets going down. Nobody likes losing, but I like the territory we're in right now because it does give us opportunity to move things for a better place in the future, just depending on the outcome. So we're not telling people, hang in there, don't panic. It's a buying opportunity. But we are saying, hang in there, don't panic. It is a buying opportunity, but let's look at all these other strategies that maybe we can place into this bad time we're in and take advantage of it.
Well, I don't want to make this sound like this is an emergency. It's an emergency. But, for you, it might be an emergency. And if you want to sit down with Charisse right now and say, hey, I don't like what's going on right now, and I sure don't want this to happen to me while I'm in my retirement. You're 3 years out, you're 5 years out, you're listening to this show because you're looking for answers. Okay, let's have an appointment. We call it a complimentary retirement consultation. That's exactly what it sounds like. It's a free meeting where we sit down and say, okay, where is your money placed? Now we can say, look how much you lost. The market went down 10. You went down 10. Let's not have that, okay? I think one of the things I've learned from you, Charisse, over the years is this. If you have your allocation, and let's just pick a couple of numbers, 35% in the market and 65% out of the market, and the market goes down 50%, you're down 17. And you can recover from 17. But maybe you can't recover from 50.
Right.
So let's stop that. Let's have that meeting right now. Here's our number on our website, 833-368-3680, 833-368-3680, or use our website, zinniawealth.com, ZINNIA wealth.com. There's a little gold box down in the bottom right-hand corner. It says complimentary retirement consultation. Click on that. We'll ask you to put in a little information, and we'll give you a call and get a meeting scheduled. All right, so a lot of people on the financial networks have been talking about what do you do when stuff like this happens? All right, so here's Carrie Hannon, and she's on Yahoo Finance, and she has 4 steps. This is her list, 4 things to do during crazy markets like we have right now.
First thing, number one, I tell people and all the advisors I've spoken to today, say, wait, sit on your hands a little bit. Wait before you make any big emotional moves, okay? Number 2, it's important to stay in equities, no matter how close you are to retirement. This is where your growth is going to continue to come from. That said, the older you are and the closer you are to retirement, you need to shift a bit into, some cash equivalents or some great fixed income opportunities. We're just at the beginning of what I would anticipate to be a few years of volatility. And so periodically you should be rebalancing anyway, but this might be a good time to have that conversation.
All right, so there's her 4 steps. Wait, don't panic, don't give up on the stock market. It's still a place for growth. Lock down some fixed income, especially if you're near retirement, and rebalance, exactly what we've been talking about. Do you like the list? And is there anything you would add to the list, Charisse?
Yeah. So the only thing I didn't really like is, stay in equities. This is what you have to do to earn money, which is not a true statement, because the closer you get to retirement, especially in retirement, you want to have less equities because there's other things out there that are going to be more stable, that will produce income and a good return, a reasonable rate of return. So I didn't like that. It was kind of cookie cutter. And then shifting a bit to cash equivalents. I was just writing that down as I heard it. I'm okay with that. As long as cash equivalents are making at least 4%, I'm okay with that. But it's really open-ended. I would prefer there to be a plan that's pretty locked down, where you already had your cash equivalents, you're not selling when equities are down, and you already have all these alternatives, whether it's real estate, private equity, some of these glorious notes out there, maybe even a couple annuities. Because if you had all of that built in, you wouldn't be worrying about what's going on today, because you see the plan, you know the plan, you know where the income's coming from. The income is not coming from the stock market accounts that are going down. So most of it was sensical, for sure. But a couple of things I just always question, too cookie cutter. And we want to be careful not to listen to all the noise out there, but you can take bits and pieces from that. So that's what I got from that.
So I think one of the things I do is when everything goes crazy like this, I ask Charisse, are people calling? And most of the time, Charisse tells me, nope, they're not. And it's because of what you just said, Charisse, is we have a plan in place. We're not completely dependent on the market for our income in retirement. And people know the check is coming in, even if the market's going crazy. And that's kind of where you want to be, because I always say the big question I want to know when I sit down and talk about my retirement is, am I going to be okay? And some of the calls that you might be getting are, hey, Charisse, are you sure I'm okay? You go, yeah, you're okay. You're okay.
It's interesting because, honestly, sometimes you just don't know what you're doing until you kind of get to this time of our lives when things are volatile. And we're not getting calls. And it just gives me absolute peace of mind in my heart. It blows and warms my heart up so much to know people are not calling, because what I'm saying today is true. This is how people feel. Maybe they have a couple accounts that are rocky, but they know those are the ebbs and flows. We accounted for that. That's not part of our basket for the next 5 or 10 years, possibly. And so we just don't get those fired off calls here. And year over year, we've said that, if the market goes down to 30%, we're going to get a couple of calls, because we do have a couple of clients that are fully committed to stock market and said, I don't want to go down the alternative route. I don't want the notes. I don't want this. I don't want the cash equivalents. Yeah, we'll get those calls, but it's very far few in between. And you know what we do? I think this also gives people incredible peace of mind. They know that we are not sitting on our hands when markets are doing what they're doing. They already saw that if you're on our active managed portfolio, we have a day trading portfolio, that 4 weeks ago we already maneuvered. So we still had wins in our portfolio where across the country, everybody was negative in their accounts. So I am so proud of those portfolios right now. And there's other things that didn't take a loss. And then we do have some high leveraged portfolios that people understand that are taking losses, right? We also have built-in exit strategies. Oh my gosh, people just knowing that, hey, this is the plan. If the markets derail and we're going into like a 2000 or a 2008 crash, they know they either have a 50% exit strategy on some of their money or a 100% exit strategy. But I'm going to tell you, there must be some sort of softness in their hearts and their brains, and they're relaxing a little bit more through times like this because we're not getting the calls.
Yeah. You got to have confidence going into retirement. And I say it all the time. You want to know the answer to the question, am I going to be okay?
Right.
And once we get that plan in place, when times like this happen, you see the plan work. And that's really what you want to do. You don't want to be in your retirement watching Fox Business and watching CNBC and going to your phone and watching those arrows go down and everything's in red and you wondering, am I going to have enough money for retirement? Mm-hmm. You want to know that those checks are coming in no matter what's going on. That's the kind of plan we want to build for you at Zinnia Wealth. Give us a call, 833-368-3680. Again, 833-368-3680 or online, zinniawealth.com, ZINNIA wealth.com. Hit the button that says complimentary retirement consultation.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client.